Staying in that region, Alibaba, China's answer to Amazon, is worth $200 billion on the grey market. That's the market where orders can be placed with brokers before the firm starts trading. The online shopping giant is on track for the largest technology flotation in history, beating the likes of Facebook, Twitter and eBay. The firm is set to list on the New York Stock Exchange early next month and may list with a market capitalization as high as $245 billion, putting it up there with the world's largest retailer, Walmart. And now joined by Naeem Islam from AvaTrade. Let's talk about China first of all. Are you concerned about what's going on? Because it's a bit like Europe. We get these figures every week, don't we? And we look, well, you know, doesn't look quite as strong as it ought to be. Do you feel it's working well, or do you feel it's getting weaker?
I think if we compare the market where the Chinese are today as compared to the start of the year, we are much better in China. I'm not going to write this data. I'm just going to say that, okay, this is a one-off reading, and the Chinese economy is still very, very strong. And then we have a 7.5% GDP target. As long as the government is behind this, the Chinese economy is going to carry on going on the upside, and perhaps this is a kind of an opportunity, because as long as the central banks are behind them and pushing stimulus in the market, there's an opportunity.
A weakening currency, though, makes life difficult, doesn't it? It's good for exports, but actually to service the country's foreign debt gets expensive, doesn't it?
It does certainly get expensive, and then when you have the likeliness of the geopolitical tensions combined with that, with Russia and Ukraine kind of a situation, and then we have a biggest partnership between China and Europe. The Germany is kind of slowing down there. So there's a bit of a concern over there, but again, here is an opportunity for investors, because ECB is about to bring 400 billion euros in the market. That is a massive amount of a TLTROs, which is in normal person, it's just kind of a loan which is coming into the market. And in September, 30 billion worth of money is only coming. 7 biggest Italian banks are coming. So I think this is an opportunity, as long as the ECB and the central banks in China, they are there. Any kind of pullback is an opportunity for investors to buy it.
What would they actually buy into?
Well, Alibaba, for example, I mean, like, that's the biggest IPO of the history. How much was Facebook? Was about 16 billion. This is a 20 billion worth of a market. Now, Michael, the thing about Alibaba is how they can play. Of course, you can go and buy the IPO. But if you don't want it to play the IPO itself, remember who has the biggest stakes in IPO. You have a Yahoo, and you have a SoftBank, which controls 34%. So regardless whether you are sitting in China or you don't have the access because Alibaba is going in New York, you can play it through SoftBank, which owns 34%.
Could you also play it through, you know, often said in the past that when these big IPOs come up, you don't necessarily go for the headline IPO, you know, the big name, but the machinery underneath. That's presumably an opportunity.
That's what exactly. I mean, like, Yahoo is sitting there, SoftBank is sitting there. They are going to be on the board of Alibaba. The company has doubled its revenue, and according to their filing for this year, their profit nearly trebled, $3.1 billion.
Thanks very much indeed for joining us.
Thank you.